Hello everyone, I'm Abdul Al Rezwan, your host for the podcast Investrek. We're glad that we have Mr. Safwan Saad as our guest for the fifth episode of the podcast. Mr. Safwan has graduated from North South University back in 2009 and immediately started his career in BRAC EPL stock brokerage. And since then, he has been working in different capacities in the same organization. He has navigated around multiple sectors during this time to cover listed companies in Dhaka Stock Exchange. Currently, he is the Deputy Head of Research and leads the financial advisory services provided by BRAC EPL Stock Brokerage. He is also a CFA charter holder. Now, anyone who has come across Mr. Safwan would vouch for the fact that he is also a food connoisseur. A man with eclectic taste, he keeps things pretty simple and considers chilling the utmost priority in life. We'll start our discussion with Mr. Safwan about very different aspects of capital market, and we will also touch on some other aspects that interest him deeply. Safwan bhai, welcome to our show, and thank you for giving us time even during Ramadan. Uh, we are really thankful to you for your time. Uh, why don't you just begin with your current role in Brachypel stock brokerage?
Well, thank you, Fuad. Uh, so I've been working at BRACPL for the last 8 years. I used to work in the research team. I still have work in the research team, but over the years my roles have changed. At the beginning, I used to do the research stuff, company coverage, but over the last 2-3 years, my role has shifted more towards the advisory work. So I now more focus on corporate advisory, financial management work. I advise their portfolios. Currently, my AUM is about USD $25 million, and besides that, I also help my colleagues with the core research work. I help them with the models and reports. So that's my basic function that I do.
Do you help the companies actively manage their portfolios, or you just advise them on their portfolios?
Uh, it's morely active management. Although as per the agreement, it's mostly supposed to be advisory, but we have to do the active management because it's difficult for them to track the market.
Right. So you also play an advisory role as well as the portfolio management functions are also basically executed by you.
Yes.
Okay. Okay. Uh, you have been in equity research. You have worked in equity research for number of years, and now you are working in financial advisory roles. Uh, what did you enjoy more?
Uh, this part is more exciting.
The
It's
current role.
exciting the current role
Okay.
because I mean the research part, you know, that you do the work, you find out the stocks, right? It's good when the stock goes up or goes down as per your call, you feel good. But here you are more actively involved, so here you can actually taste it more, basically you can feel it more.
It's more
uh,
tangible.
it's more tangible, yeah, it's visible. So the work that you do, or let's say the great work that you do, you can actually see the outcome.
Okay. Okay. Uh, we all know that financial advisory services is pretty big, both for individual and institutional investors across the globe. Why don't we see similar trend in Bangladesh? Why do you see that retail investors, even institutional investors, want to trade on by themselves? They don't want to take professional advice. Why is this the case?
I mean, it's a very difficult question, but let's try to put it. Uh, First of all, the market structure in Bangladesh and the level of financial literacy, that's a big thing in Bangladesh. If
You
you
mean the deficiency of it?
Yeah,
Okay.
I mean, in general, the investors, they are not actually aware of the risk thing, because your return is risk and return. These two are side by side related. So in general, people are not aware of this concept, the risk and return concept, and the concept of investing in capital market. If you look at back in 2010, uh, so the market was roughly evenly split. I mean, the institutional investors and the retail investors, it was, I would say, about 50-50 back at that time. But then we had the market crash in the last 5 years. Now it's mostly retail driven because most of the institutional, they have suffered a lot. So what happened was that because I mean, incidents like the market fell in 2010, So people make money. Doesn't matter which stock you invest,
Right.
a junk stock or a good stock. So the value of research, people do not used to value research at that time because
Or
everyone was
professional
making,
advice.
yeah. So they were making money. So what is the point of paying a fees to someone else?
Mm-hmm.
So they used to view it like that. It's an easy thing. But as with all the bubble, it bursts, right? And now that they have realized, because as I said, in the last 5 years, the participation of the institutional, they have gone down. It's mostly retail now. If you look at all the banks, they used to have big portfolios of 1,000 crores.
But that also have the impact. I mean, the regulation of the capital market exposure for the banks has also played a role, right?
Yes, it has, but if you also, I'm talking about the percentage return. So if you look at the portfolios, I don't think they generated enough return in the last 5 years. If you look at the last 5 years horizon, I think all these big portfolios they actually made loss.
For the institutional investors.
Yeah, so hardly find any institution that has made good return, stable return in that period.
And that should convince them, that should incentivize them to seek professional advice.
Yes,
And why isn't that the case?
uh, that has happened to a little extent because
Okay.
now we are giving advice to one bank, one life insurance company as well, and some of the banks they opened account with us with the intention that they will get the research report.
Okay.
Still they are not willing to pay the management fees because they think they don't have the bigger concept. Like if you manage a portfolio, if you get a 15 to 20% return, you can, the 1% is actually negligible, right? So they don't have that vision that you can, the concept of paying fees is not there. But I think it will come in the next 2 3 years because bankers or let's say insurers or they are not specialized for stock market investment.
Right.
It's better to leave it to the special ones. Another problem that persists in the market is the lack of good asset managers. I mean, if you look at the market in total, about 4 to 5% of the market is being managed by the professional managers,
Right.
and out of them, there are like about 10 to 15 AMCs. Only one or two they are sort of credible. They manage the funds in a professional way, but most of the others they usually invest in the market. There is no strategy, so there a lot needs to be done here in the asset management industry. So I mean, if I look at the next 10 to 20 year horizon, I will actually see what I see is that the percentage of asset managers, I mean the proportion, they will increase a lot, and with that also the institutional investors they will be willing to put their money with the asset managers and seek professional services.
It's been 7 years since the market crashed, and one would imagine that this is a long time frame for the institutional investors, or even large individual investors, to understand the value of research or professional advice in the form of financial advisory services. Uh, but still, we are in the nascent stage, and that really makes me surprised that even in 7 years, some people probably started understanding the value of research, but it's still not enough.
Yeah, so the problem is with that is, let's say 10 banks they're looking for professional help.
Right.
Are there 10 good fund managers in the market?
Okay.
So the problem is not only with the demand side, it's also with the supply side. We don't have a good number of credible fund managers.
And why is that the case?
Uh, as I said, it's because of the history. I mean, we don't have a strong track record of creating good, talented professionals coming into this sector. I mean, if you look at the talent pool of Bangladesh, I mean, the top graduates of IBA or let's say Oxford University, their number one preference is probably going abroad and then probably working at the multinational companies here. None of the top individuals, I mean, hardly a few, they will consider a career in the capital market. So talent is a big issue. Um, and then the concept of the CFA, the CFA charter holders, we are very few. I mean, there are about 50 to 60 CFA charter holders in Bangladesh, and this number is growing, but still it is not at a optimal stage. And the value of CFA, it is also not being understood by the institutions.
Right.
So these things will take time. But what I can see over the last, what has happened in the last 3 years, I can say that in the next 5 years, things will improve a lot. Things will change a lot. I mean, the demand for research, the research analyst is a lot in the market, versus supply is not that much, but things will improve hopefully.
Okay. We all do hope that.
Yeah.
You have been working in capital market for almost 8 years now, right? And you have seen a raging bull in market in 2010 and a market crash following that, and a subsequent recovery, some sort of in last 6 7 years. I want to particularly talk about the initial public offerings, that is IPOs in Bangladesh. Would you please briefly elaborate the whole process of taking a company to public in Bangladesh?
Uh, okay. So currently, if a company wants to come to the capital market, there are two ways that they can come. One is the fixed price method, and one is the book building method. For the fixed price method, the company can at maximum raise the face value equivalent of money. So that is 10 taka per value for Bangladesh. If the company wants to issue the share at a higher price than the face value, then they need to apply for the book building procedure, which is a bit lengthy in process. Fixed pricing is very easy. So you need to have 3 years of operation and 2 years of positive net profit and operating cash flow. So if you have that, you can apply for the IPO.
So even relatively startups can do that.
Yes.
Okay.
There are other criteria definitely, because the minimum paid up capital has to be 15 crore.
Oh, right.
Yeah, and there is also a minimum issue size. I think it's 10 or 15 crores
Okay.
IPO, or 10% of paid up capital.
Mhm.
But but relatively it's easy to come via fixed income method. Although as per the policy, it is supposed to take about 2 3 months for the entire process to go through, but in reality it takes about a year
For the fixed price
for the
method.
fixed price method.
Okay.
Uh, if you want to come via the book building method, that is, if you want to raise more money than the face value, uh, it's a bit elaborate. You need to organize a road show. You need to invite the institutional investors.
What do you mean by roadshow?
So basically, it's a gathering where the company invites all the potential investors, institutional investors who would invest in the company. So they present the company case, about the company's operations, future perspective, about the market share, competition, everything, so that the investors can analyze the stock and give their own opinion on what the value should be.
Okay.
After a period of 3 days, they need to submit a price bid, and based on that, the pricing is determined. It is a very lengthy process. Currently, it takes about 2 years.
2 years. That
Yes.
sounds very bureaucratic.
That is bureaucratic in nature, and there is no guarantee that even after 2 years you'll get the money, because there are lots of issues with the bidding price and all those sort of things.
So if I want to expand my business right now, I'll have to wait for probably at least 2 years to get my money and then start my expansion. By that time, the business case that I thought about probably is not
Yes, in fact,
in fruition in reality.
this exactly same thing happened with Acme Laboratories. When they asked for IPO, I mean, they got the money, I think, about after 2.5 years. So by that time, the projects that were needed, they had to start it with their own money, or let's scrap it, because the feasibility has changed. So this is a big problem in Bangladesh. It also happened with United Power, another company that came via book building. So they got the money after 2.5 years. By the time they already got the money, they don't have any use of it.
And as far as I know, the regulator also penalizes the companies if they don't utilize the IPO proceeds in the manner that they have mentioned in the IPO prospectus. Is that right?
That is absolutely correct.
So how does this work?
But in case of, let's say, Acme or United Power, so they have already invested the fund probably from their own cash savings. So this
Or
is not
bank
much
loan.
problem. Or bank loan. The problem arises for, let's say, the smaller companies that actually take the money for other purposes. So the point that I was trying to say, that the quality of IPO has been very poor in the last 5 years. So we saw a lot of textile companies coming to the market, raising the fund for one purpose, but eventually using it for different purpose. So that for those companies, SEC usually penalize them.
But if it takes you 2 years to raise money for your expansion or for your for a particular plan in your business, it's difficult to blame those companies if you can't get your money at the right time.
You can blame the companies if the company has the intention to do it. But if the company's intention is to raise capital for shifting of the money, let's say for other things, then you cannot blame the company.
Okay, you cannot blame the regulator.
So
You
you
mean
cannot blame the regulator.
right? Okay, so So you mentioned that the quality of the listings in Bangladesh is very poor, especially in last 5 6 years. So that really surprises me because what you have seen probably in every IPO in last 5 6 years, almost every IPO is that it is oversubscribed by probably 20 30 even 50 times that we have seen in recently for a particular IPO. So why does this public hysteria regarding IPO subscription not go away?
So
And do you think the what would be the could be the possible rationale for that?
it's a worldwide phenomenon. Look at what happened to Snapchat. I mean,
Mhm.
there is something to do with IPO and investors. They
But
flock
there
around
is
it.
no, in US, you cannot just, you cannot be very confident that your particular IPO will definitely be oversubscribed. There are plenty of instances when the IPO was undersubscribed and the investment banks had to buy it on their own. And I know 10 times, 20 times, 40 times, that's abnormal for probably most market standard. And if you know that this business is poor and the reason that they are taking this money is probably not the reason that they are saying, so and you are still craving to get a piece of that company,
Well,
so that seems a bit contradictory.
well, that's us, the analyst, who knows it. But in general, as I said, the general financial literacy level of the investors, they're not at par. They don't
Mhm.
know these things mostly. It has got something to do with the supply side as well, because every year you have like eight eight IPOs coming in,
Mhm.
roughly nowadays, and you have a flock of 3 million investors with dual accounts who are trying to get shares. So it's a issue of supply and also the knowledge level of the investors at what company they're investing in. The last good IPO, as far as I can remember, Grameenphone was a very big IPO back in 2009, and that actually also helped for the development of the capital market, because a lot of people got into the capital market via the Grameenphone IPO. After that, we had Mobile Jamuna coming in, United Power, Acme Lab is also a good IPO it seems.
Mhm.
But if you see the last 7 to 8 years, only a handful of good companies that came to the market. Most of the others, they were not that, let's say, well established companies, but still what happens is that with the euphoria and the IPO and people doubling money or tripling money, there are cases like, I think it has gone up by 5 6 times.
Yeah.
So because of the artificial demand, people just flock in there. But let's say if it was a case that there are 50 companies coming in, one every week, then people will actually choose where to put the money in. Now you don't have an option. It's like one IPO every 2 months if there are six IPOs. So you invest there. But let's say if there was two IPOs coming in one week, you actually decide which one to invest. Then you actually think, which happens in US and other countries, I
Well, if
guess.
it's bad anyways. Even if it's just one IPO in every year, and if it's a bad company, why would anyone put their money in a bad company?
Exactly. Why? So, like those of us who actually know about the valuation and the
Hmm.
analysis skill, so we'll not put in money in there. I mean, I mean, I personally have not invested in any IP in the last 5 years. It's
Okay.
it's a it's a waste of time. I mean,
Probably even if you did, you wouldn't probably get it anyway. So.
yeah. So because of the demand,
Okay.
but it's a concern, and I think this is something that we actually need to address, because if you take the example of Grameenphone, so what the impact it had in the capital market. If we have big companies like Unilever or Robi coming into the market, these are big companies, right?
Mhm.
So you'll have some quality investors and quality names coming to the market, and also good supply of shares.
Well, at the same time, the current interest rate in Bangladesh, probably across the globe. One of the on the lower side, probably from historical perspective. So even from corporate finance perspective, capital allocation perspective, probably it doesn't make much sense from these large corporates or multinational companies to raise equity from capital market.
Yes, but if you can, excuse me, if you can work on the uh, tax side, right? So there is a big tax benefit. I'm not saying referring to telco or something, but in general, there is a 10% tax
10%,
tax
right.
benefit, which, for example, let's say Unilever, it will be a very big difference. Uh, but they weigh the transparency cost,
Hmm.
for which I think they are not considering coming in the capital market. So it's a trade-off. I mean, you get the tax benefit versus you go for the more expensive equity. As you correctly said, debt is cheaper, so it's easier to expand in that way.
Right. What's your opinion on our investment banks? Do you think our investment banks consistently make the valuation undervalued, and that's why almost all the cases the IPOs probably doubles, triples, or is just because of the
It's just
demand
because
for
of
the
demand
IPOs?
side.
So
Because
investment banks does not have to be at the fault of it, right?
I don't think, first of all, investment banking in Bangladesh general knows anything much about valuation. So whatever value you put, let's say if a company comes, you put 20 taka, 30 taka, 40 taka, 50 taka, it will go up. Even if you put 100 taka, it will go up. So I don't think investment bank their valuation has got to any role to do with this
Okay.
upsurge in IPO pricing.
Okay. So in that case, investment banks have a very limited scope of work. I mean, if they don't have any, the fear that they may have to buy it themselves if the subscription doesn't happen as planned. So if that's not the case, investment banks can, probably put any number out there and
So
it would
that is
still
that is
probably
what has
double
been
or triple.
happening. Yeah, that has what been happening.
But that's the case for.
Just to add you back in 2013, when the market was going down and down and down, at that time I think about 3 or 4 IPOs they were undersubscribed.
I remember Bangladesh submarine cable.
Bangladesh Submarine Cable, also the fund way ACBL First Mutual Fund,
Mutual funds, right?
and couple of other. I
I
think
think mutual funds were undersubscribed
United
even
Year,
probably 2 years back.
Unique Hotel, it was undersubscribed as well
Oh, I see.
because people got multiple lot out of it. So
Okay.
that happened to an extreme that investment bankers they had to put in money in that case.
In that case, it's rare, but it did happen.
It did happen,
Right.
which was unthinkable.
Right. So in your career, you have covered many different sectors while you were in equity research, uh, like pharmaceuticals, steel, engineering, power. But I would like to just focus on the cement sector in today's discussion. So what do you think? Is Bangladesh cement sector competitive from global perspective? In global stage, is the cement sector competitive? And where have we improved in last 2-3 decades, and where we are still lagging behind?
Uh, if you talk about the global aspect, global competitiveness, I would say we are lagging behind. Simply because of our sourcing of raw material. Because limestone is the key raw material source for cement business. It is used to produce clinker, which in terms is actually converted to cement. So we don't have much limestone quarry in Bangladesh. In fact, all the cement companies in Bangladesh they need to import the limestone or the clinker.
Except Lafarge.
Yeah, I was
Okay.
coming to that. So they import the clinker from outside, mostly from Indonesia and that area. Lafarge is the only exception because it's actually not an exception because Lafarge has a subsidiary in India, so the limestone is actually based in India, not in Bangladesh.
Right.
So even so, they are taking the limestone from India and bringing the limestone here in Bangladesh and then converting it into clinker and cement. So only Lafarge is the only integrated cement manufacturer in Bangladesh, and all the others are mostly grinders. They import the clinker, add something value addition, and then they make it cement. So for this reason, Bangladesh is not that competitive. If you look at the pricing difference, Bangladesh cements they are actually priced higher than India market as well.
Okay.
There is a tax cushion for the local manufacturer. I think it's at 25% now.
Import duty.
Import duty. So that's why the Indian cement manufacturers do not come in Bangladesh because of the tax thing. But overall, uh, we are not that competitive at a global scale. Saying this, we have improved a lot in the last 2 and 3 decades. Back in early 90s as well, we used to fully import clinker from outside,
Hmm.
and the prices were exorbitant back then. Then a couple of companies started operation in late 90s. They set up a grinding factory over here, importing the clinker, and from 2000 onwards, it actually picked up. From 2000 to 2010,
Hmm.
we saw about like 100 companies, cement companies, manufacturing in Bangladesh.
100.
Yeah, I mean, as per the numbers, I think there are more than 150 registered cement companies.
Or
But
hundreds in operation.
if you actually, the top 10 contributes mostly, but probably about 50 of them are in operation, I would say 50 or
What's
70.
the market share of the top 10 cement manufacturers?
That would be around 60 to 70%
Okay.
market share. So from a period of totally importing cement, they have gone into the manufacturing cement. So that has changed. And one thing is that now we are seeing bigger cement plants in Bangladesh. Companies setting up 2 million ton, 3 million ton capacity. So the bigger the capacity, the better is the what do you call
Scale.
it? Scale. Yeah.
Hmm.
So that has changed over the last 2.5 decade.
Okay. So does the capacity that we have in the cement sector, uh, is it enough for the country, or we have to invest more?
Uh, we have over invested in the sector. In fact, historically, if you look at the cement sector for the last 10 years or so, uh, capacity utilization has been around 60% consistently, which
Okay.
is it's like our exchange rate. When it stays constant, it's very constant. Mm, so, but actually, if you think about the cement sector dynamics, it's not like that, because in Bangladesh there is seasonality factor. There is the monsoon period where we have heavy rain for like 4 to 5 months.
Hmm.
There the cement demand goes down sharply, and in the dry season it picks up sharply. So in a year, about for 6 or 7 months, the peak is, let's say, utilization is 90%. But for the rest, monsoon season, the utilization goes down to about 20 to 30%. So overall, the 60% utilization number stays there, but during the peak season, most of the large companies, they are fully occupied. Uh,
Okay.
we have seen a lot of investment. I think currently the total demand is about 25 or 26 million tons, versus I think we have a capacity of around 38 million tons or 40 million tons.
What's the demand during the peak season?
Uh,
I mean, so 25 and 38 is annual figures, right?
yeah,
Oh, okay. And you say that the capacity utilization during the peak season is 90%. So, so it may seem that the sector is running with significant overcapacity, but
it is not.
in reality, it's
It's
not.
not, because out of the let's say 25 million, if I do the numbers, I would say about 60 or 65% demand comes from the peak season, or
Hmm.
70% demand comes from the 7 months,
Hmm.
and the remaining 30% probably comes from the 5 month period. So if you do the numbers, I think will in the peak season it will be something around 80-90% utilization. So it's not that
Hmm.
it's excess.
Okay. So, given the infrastructure development plan that the government has, and probably incommensurate with the public financing, probably will see a surge in private investments in those particular sectors as well. Don't you think it makes sense for the cement companies to expand their capacity so that they are ready to uh, probably to meet the demands during the peak season?
uh, it makes to some sense if you are a smart investor, if you can forecast the growth. The good part of cement or being a cement analyst is that growth is very easy to forecast.
Okay.
So cement growth is very highly correlated with GDP growth. So if I look at the last decade from 2000 to 2010, average GDP growth rate for Bangladesh was about 6%.
6%.
And usually for cement, it's worldwide, it's a phenomenon that the cement multiplier is about 1.5 times. And if you use that, for Bangladesh, it was around 9.5%. So the correlation is very high.
Are you talking about the volume growth?
I'm talking about the volume growth.
Right.
So cement, it's all the volume numbers mostly.
Okay.
So in the last 7 years also, if you look at the GDP growth of Bangladesh, probably around 7% or close to 7%.
Mm-hmm.
Cement growth has been more than 10%. So the multiplier of 1.5 times applies very, I mean, it's very correlated with the GDP growth rate. So being a cement sector analyst, if you forecast that Bangladesh GDP growth rate is expected to grow, let's say 8% in the next 10 years,
Mm-hmm.
you can easily expect the cement sector volume growth should be around 12 and a half, 13%. So if you're a smart analyst, you can actually forecast the demand for the next 5 years and plan ahead. In Bangladesh, unfortunately, the big conglomerates, they don't have this vision inside. It's most like a euphoria case. Let's say, for example, if I take the example of Shah, I think they have a cement capacity of about 5 million tons currently, whereas they are selling about 3.1 something, around 2 million tons. But we are hearing that they are going to double the capacity from 5 million to 10 million ton.
Okay.
I mean, so this is a big expansion, right? So, which I don't think is optimal. I mean, they can plan it out in phases.
And they're the largest players in the market.
They are the
Largest
largest
player.
player in the market by far.
And what I have heard that other players are also contemplating on expanding their capacity.
Exactly. I mean, this is how the cement dynamics, the sector dynamics have totally changed. If you go 5 years back, Shah Cement used to be the market leader with about 13% market share. 13% market share. Then there was Heidelberg, Lafarge, Holcim, the multinational companies. They had about 7-8% market share. So, but they were among the top five. Now, 5 year forward, Shah Cement continues to be the market leader
Mm-hmm.
with massive capacity expansion. The number two, number three player, they're now all local player. So Boshundara Cement is there with 3 million ton capacity. Seven Circles is there. Crown Cement is there. Premier Cement is there. I mean, so the dynamics has totally changed in the last 5 years. So it's now mostly the local companies, they're dominating the market and they are going for massive capacity expansion.
I mean, what we have seen probably in almost all the sectors in Bangladesh, that it is being dominated by multinational companies. What exactly is the reason that in cement sectors that is not the case?
Mm, I think there are two reasons. First of all, is the nature of the product. It's one product,
Right.
right? So it's
Mm-hmm.
one product, and it's basically at the end of the day, it's cement.
Mm-hmm.
So whether Shah is
It's a
making
commodity.
it's a commodity. Whether Shah is making it or Lafarge is making it or Heidelberg is making it, at the end of the day, there is not much difference. There might be difference in strength, how fast the cement dissolves or something like that.
And there's also a question how much the general people understand it.
Yeah, so at the end of the day, it's cement.
Cement.
So it's one product. So if you're offering at a lower price with a good packaging, right?
Mm-hmm.
Versus let's say multinational company offering a higher price with a good packaging, will you go for the lower price? What is the point of paying higher? Because it's the same thing.
Mm-hmm.
So for that reason, the local companies, they have an edge because the local companies usually they evade the VAT and tax, especially the VAT. So which the multinationals cannot evade. So if you, I don't think the multinationals and the local companies are in the same playing field. Although they are selling the same commodity, multinationals, as you know, because of the parent company regulation and monitoring,
Mm-hmm.
they are very strict with the VAT rules and all those sort of things. They cannot evade it. But for the locals, it's very easy to evade the VAT and the tax as well. So that is the reason where the locals are a step ahead of the multinationals. Just to add to this point, I mean, since we have been talking about the VAT issue, implementation of VAT rule uniformly across all the sectors in Bangladesh, the multinational companies were actually looking forward for it because probably it would actually have uh, helped them because probably the Shah Cement and the local companies, they would have to
It will
follow
probably create a more level playing field for
level
them.
playing field for them. So this is something that the multinationals can look forward to if it happens.
Okay. Okay. So apart from uh, but the two three reasons that you mentioned, for the reason of dominance by the local players. There's no other like distribution channels or any other pockets of strength that you see in local players.
There is definitely,
Mm-hmm.
but I would not put that down to the distribution much, because as I said, at the end of the day, it's the same product. I mean, let's say if Heidelberg is selling something at 400 taka versus Shah is selling at 360 taka, so it's
Mm-hmm.
easier for the people to sell it to the end consumers. So distribution plays a role to reaching out the customers, but if you actually know the dynamics, because Dhaka is actually catering out more than 60% of the demand. So it's the Dhaka mostly market,
Mm-hmm.
and Chittagong they contribute about 20%, 20 to 25% of the demand. So Dhaka and Chittagong combined, they drive about 75 to 80% of the total demand. So distributing the cement in these two regions should not be a big challenge.
Okay, understood.
So that's why I think distribution is a lesser factor here.
Okay. Uh, what I've seen in probably last 5 6 years, global, I mean, from global perspective, is that the commodities from all sorts of commodities have gone down. The prices have gone down. Uh, so does that help the cement manufacturers equally in Bangladesh, or some companies are being benefited in disproportionate way, and some are not benefited as much as the
In
other
general, the
companies are?
sector is benefited because, as I said, the main raw material of cement is clinker.
Mm-hmm.
So, as with other commodities, clinker price also went down sharply in the last 2 3 years, or in the last 5 years even.
Mm-hmm.
So, for the companies, they are now importing the clinker at a much lower price than they used to do, and we also had a stable exchange rate in the last 5 years. So, in that means the margins have improved for the local manufacturers in Bangladesh.
Did the margin improve a lot?
Yes, I think for Heidelberg, because it's a listed company, what we
Mm.
saw is from a gross margin of 24%, it has improved to 28% or 29% in the last 2 3 years. And I'm talking about 2016.
Mm-hmm.
17 is a totally different industry now.
Okay. What
Uh,
changed?
the pricing power changed.
Okay.
So
It's much more competitive
it has always
from
been
pricing
competitive.
perspective.
It has always been competitive, but as I mentioned, like the local companies are going crazy with the expansion, so they have a lot of free capacity. So they are just dumping cement in the market at a much lower price. So there is price cut war, which never used to happen till, let's say, 2012 or 13 even. So usually what used to happen is that the people used to follow the leader,
Mm-hmm.
what the others were doing. Let's say Shah Cement or Heidelberg Cement. So every year they raise price, the others used to raise price. Now the competition is who can sell at a lower price and grab the market. So the price war has started from last year. It was very visible from last year, second half onwards.
Mm-hmm.
This year also it has continued the price war. So 2017, the margins for Lafarge and Heidelberg and almost all the cement companies, they will dip this year.
Okay. So the falling margin, more competition. Uh, do you think that probably there has been some over investment in this sector, and which will uh, probably convince the probably the potential investors to keep a fair distance from this sector going forward in the listed universe?
I would say so. I mean, problem is the listed universe do not represent a big chunk of the total sector. It doesn't represent the big local players like Shah Cement or Bosundhara Cement. So if there was a case that Shah or Bosundhara Cement, they were listed, the big players,
Mm-hmm. Mm-hmm.
and there was a good transparency issue with them. I mean,
Mm.
they're transparent with the numbers, the
Mm-hmm.
VAT roll is applied. Then investor could have thought. But I actually see the multinational companies struggling against the local companies. One more reason for which the multinational struggle is that their decision they need to wait for the parent company's decision. I mean, take the example of Lafarge.
Mm-hmm.
So in 2012, Lafarge had about 8% market share, and they were at 100% running at 100% capacity. You fast forward it to 2016, before the merger took place,
Mm-hmm.
they did not go for any capacity expansion, so they just lost market share.
Right.
They were able to tweak the factory to produce more, but how much more? 5% or 10% more.
Mm-hmm.
So they lost market share, but they could have easily expanded at that time but they didn't because the parent company were not giving them the go ahead to invest. So this is another issue with multinational companies.
You have mentioned that there are hundreds of companies, 160 registered companies,
It's 100 plus, let's say.
100 plus,
Yeah.
let's 100 plus. Okay, so definitely, it seems that there is a huge scope for consolidation in this particular segment, uh, and we have already seen a merger between Lafarge and Holcim. Although it is basically happening because of the merger that we have seen in the global stage. So, do you think consolidation can probably ease competitive pressure in this segment? And is there any possibility of happening,
I
seeing another merger in next 2 3 years?
In next 2 3 years I don't see, but in next 10 years I do see. Not only in cement sector but
Mhm.
across all the sectors in Bangladesh. There are too many companies competing in the same space.
Right.
If you take the example of bank, there are too many banks
Mhm.
operating here. Insurance companies, unthinkable, credit
Mhm.
rating agencies, life insurance companies, financial institutions, you name it, the
It
sector.
is impaired the ability to do business in a scalable way.
Yes. So I think mergers will become very popular. Probably not now, probably 5 years or 10 years down the line, but we'll see a lot of mergers happening. Especially in cement sector, it makes sense because it's the same product. There is no product differentiation.
Mhm.
So it makes more sense that you merge. Then you can probably do a merge. You have the scale and you'll have uh, margin improvement in that way. So I see that happening in the next 5 years. More mergers coming up.
Do you think the merger between Lafarge and Holcim will be very helpful for the joint company?
Mm, I think it will be helpful because, as I said, Lafarge they lost a lot of market share, but they have the brand name, and also Holcim is a very highly valued brand in Bangladesh. So overall, for the company, it will be good because they will have now the capacity to work with.
Mhm.
Um,
What's the capacity utilization of Holcim?
Holcim is about 60%.
Okay.
They have a capacity of 2 million tons versus a production of 1.2 million tons. This is around 2016 or
16.
2015 data.
And for Lafarge, the utilization is
It's
90%.
it's 100%,
Oh,
more than
100%.
100% actually.
Okay,
So
like you
the
mentioned, they made some tweaks and stuff
so the
to.
reported capacity is 1.3 million tons, but
Mhm.
I think last year they produced 1.5 or 1.6 million
Okay.
tons.
Okay. Interesting. So we ask all our guests working in capital market about stock picks. The ones you think you will it will the ones you think will thrive in the longer term. So which particular sector do you find particularly compelling in next 5 to 10 years, and which companies within those sectors would you invest in next 5 to 10 years?
Okay. Uh, I think the interesting sectors to look at. First thing would be the banking sector.
Banking.
Yes, because we all know, and we also, I think we also all believe that Bangladesh is a growing economy, and
Mm-hmm.
it will grow at a very good rate in the next 10 years, 15 years down the road. We'll probably outgrow our neighboring countries in that regard. I think we all believe that story, right?
Mm.
So if you believe in the economic growth of the country, so banking is one sector that will definitely benefit. And we know about the health of the banking sector in Bangladesh. So the challenge is to find the good banks from there. So banking is one sector that I will put my money in for the next, let's say, 10 years.
Mm-hmm.
So I'll try to identify the good banks, the banks with good corporate governance, relatively because it's very difficult to judge.
Mm-hmm.
But looking at payout ratio, looking at board structure, I'll take a call and I will.
What sort of board structure do you prefer?
Uh, the more institutionalized, the better.
Okay.
The less family, the better. I
Which is surprising because I mean not surprising from your perspective, but in very recently what we have seen the Bangladesh Bank, the central bank of Bangladesh, has amended a rule allowing four family members to stay in a board. What's your opinion on that?
It's like we already had 51 banks, and then they gave license to 9 more banks. What's
Right.
your opinion on that? So it's like that your opinion doesn't matter. I mean, uh, so I think it's a bad move because they're just relaxing the rule, and uh, this is something that is not optimal for the sector. So it's
And
like
this is
that.
not something the shareholders would like to see, right?
The smart shareholders would not like to see.
Minority shareholders, I mean.
Yeah, exactly. So since we're talking about the board, let's the biggest example is Bragg Bank, definitely, because Bragg owns what, 50% or 51%? 50% of the bank. So in that way, you're safe that there is no individual or family that is in there. It's an institution that is running the show. So Bragg is obviously good pick, good choice for the next, let's say, 10 years. And then we are also hearing news on Citibank, that IFC is going to come on board. uh, we have seen what IFC has done with, let's say, Bragg Bank, IDLC, and other institutions. They actually have an influence on the board. So the general perception is that it is a good sign for Citibank.
It's a mixed bag because yes, IFC can definitely play a strong role in making a turnaround in the bank. But at the same time, the rule that I just mentioned, that you can allow 4 family members in the board, that's exactly the case for Citibank. So given this contradictory, you know, probably investment thesis, what
So
do you how do you suggest, and how do you think that the bank will definitely be a strong pick for next 5 to 10 years?
So it's basically, first of all, you need to ask yourself how many banks will sustain in the next 10 years. So let's say if the answer is five, so you need to find out the top five banks, right?
Okay.
So you play the game of omission, elimination.
Okay.
So let's say you have Citibank and other banks, right? So the family thing applies for them as well, for all
Right.
the other banks. So it's basically picking out the good ones from the basket of worst ones. So you do the method of elimination and probably come out. I'm not saying Citibank is the best choice or the right choice. I'm just trying to give ideas of how to, let's say, pick banks. Another bank could be the trust bank because it is owned by the army officials, right? So army backed bank sort of. So the issue of, let's say, director lending would not be that much for trust bank. So that is another bank that you can actually look at.
Okay.
Apart from banking sector, obvious choice is pharmaceutical sector, and obvious name is Square
Square
Pharmaceuticals.
Pharmaceuticals. I mean, all the guests that we have invited so far have mentioned Square Pharmaceuticals. So we'll probably not get into the details of the investment rationales that
No, but
for Square
I can
Pharmaceuticals.
add that similar to Square, investment managers or professionals can also look at Grameenphone.
Okay.
It's a very well managed company. It's the largest market capital stock in Bangladesh. Uh, Very well run, operating efficiency and everything, margins, very high EBITDA. I think it has the highest EBITDA among the neighboring telco companies, about 59%, I think it hit. So it's a fantastic company. So you can also look into Grameenphone. The only problem with Grameenphone is the regulatory risk. You don't know what's happening. But if you say that there is no regulatory risk, so this is another share that you can have in your basket with Square. But pharmaceutical sector as a whole, I think it is a good investment option. One stock uh, that I have actually liked a lot, but unfortunately it did not deliver, is Active 5. They supply the APIs to the pharmaceutical companies, and they're also
There
into
are
the,
raw materials for the pharmaceutical companies.
and they're also into the hospital business. If you look at Bangladesh, I mean, if you look at what has happened to Square and Apollo, the big hospitals, this business is a very booming business, given the demography and the affordability of the individuals here in Bangladesh. So hospital business will do good. In that regard, Actifine, I mean, I personally thought that it would do
Why
good.
why hasn't it delivered so far?
So that is the most disappointing part. So that goes down to the corporate governance issue. I mean, even if a stock is in a very good sector that is thriving, but because of the corporate governance, it might not do well. Saying this, the reported earnings number are not that bad. It's the stock price that has not performed.
So it could just be that the market is not realizing the potential.
Maybe market, they're not betting on the corporate governance of the company.
I mean, I have looked into this company, and the one of the concerns that I had is there's not much that you can analyze as an analyst, because the sales figures are just that just a figure.
Yeah.
There's no breakdown what's the source of these sales or the growth. There's very little understanding that you can gather from the financial statements or the annual report of the company.
Yes.
And that's not a good news for the analysts or the potential investors.
Yeah, but if you look at the brighter side of
Mhm.
for this issue,
Mhm.
it's that since not too many people can do a correct prediction or forecast of these companies,
Mhm.
you have a better chance of doing something that is that's something that not others are doing, right?
Mhm.
So let's say if a company is not reporting the sales
Breakdown.
so you can dig deep, you can make some friends in the company, you can meet people in the company, try to figure out something on your own. So that research will be totally your own research, which someone doesn't have access to.
Mhm.
So you are in a better position to give a better call and
Mhm.
maybe generate massive alpha on that.
Okay.
I'm just spinning the point other way around.
I see.
So banking sector, pharmaceutical sector, they are very good potential sector, and definitely because of the demography, the consumer sector is also very promising in Bangladesh. Although we don't have good representation of consumer stocks in the capital market,
Mhm.
we have only among the top tier companies, the ones with good fundamentals. We have Bata Shoe, Marico, Olympic, and British American Tobacco.
Mhm.
Of the four, I prefer British American Tobacco to be a good investment pick.
Mhm.
They're doing fantastic business, very well run management. Uh, so that would be my pick for the long run.
We all know that you are a foodie, and I would love to ask you which restaurant we should all try in Dhaka.
Oh my God!
I
So
mean, we have asked this question in different way to some of the guests. We asked them what are the books that we should read, and from what I have known you so far, for you the food is the book for you. So I just probably change the question to what sort of what's the particular restaurant that is your favorite in Dhaka, and what should you all try in that particular restaurant.
it's a wrong question to me, because since I'm a foodie, I mean
Mhm.
I have a lot of options.
Oh, I see.
So I can name probably 100 to you. But I think what is unique is because you have got all the cuisines, right? Indian, Pakistani, kebab, and all those sort of things. But what I actually find very interesting is the kachi. I mean, you should all try out kachi at different places to get the different flavors. I mean, we all know the Old Town kachi to be the good ones, right? The Kolkata kachi, Nawabs, and all those. Recently, a couple of kachis have come up. New places have come up like Sultans and others.
Sultan's Dine.
Yeah, so kachi is something you should always try. I mean, all the investors or people I meet, I mean, this is something you should try. Halu and kachi.
Okay. Apart from the traditional food, if we break down further, for example, uh, Italian food, or I mean English food, so other non-traditional foods. What are the restaurants that you would prefer?
So for the fast food lovers, for
Yeah.
the burgerholics, you should definitely try out takeout. I think their burgers are amazing. McChicken is also good, but takeout I think I like it more. For steaks, uh, there are two different classes of people. One is the top-notch steak lovers who love the usual steaks that you get, let's say, in
Mhm.
developed countries, and then there are us who love the Bangla version of steak.
Okay.
So you should definitely go to Spaghetti Jazz to have the Bangla version of steak.
What do you mean by Bangla version of steak?
I mean, it's not the normal steak. I mean, the way it's cooked.
Okay.
It's cooked in a way which the us Bengalis we love it.
Okay.
You'll enjoy it more.
What's the difference? I mean, for
I mean, the steak lovers, I mean, there are levels, right? Rare steak, medium steak,
well done.
well
Yeah.
done steak.
Yeah.
So the true lovers of steak, they will actually go for the rare or
Mhm.
medium.
Okay.
They like to eat it very raw.
Mhm.
But us Bengalis, we don't like it. We like the well done one. But if you actually cook a steak in a well done way, it's very difficult to eat it. It's very hard. The softness is gone. But you can devise a way so that you can make the well done eatable. So that's what you will get at spaghetti jazz.
Okay,
You use a well done, and it comes and it's very juicy.
I see. Tell our listeners about a particular restaurant that you think is underappreciated.
Oh, once again, a very difficult question because all the restaurants are full. I mean, this iftar you could hardly get a booking.
Mhm.
I think,
Definitely talking about the time beyond iftar.
yeah, I think spaghetti jazz
Spaghetti jazz.
because not many people actually know about this place.
Okay.
Actually find it very remarkable.
Mm-hmm.
So I think I would recommend people to try out spaghetti jazz. Their food is very good.
Okay.
The steaks and they have pizzas as well and pastas.
Oh,
They have a chicken meal as well with white sauce.
okay. So you were a big fan of spaghetti jazz.
Yeah,
Okay.
I usually go there. I don't go there much, 2-3 times a year, but their food is very good.
Okay. So you keep the appetite
Yeah,
alive.
yeah.
Okay. Safwan bhai, thank you so much. It's been a pleasure really talking about all these different aspects of capital market, and of course about the restaurants in the end of our discussion. It's been a pleasure.
Thank you, Fuad.